What's going on, guys? Bexio back, and today we had a brand new video on the stock market and Jerome Powell and his meeting that he just had, the effects on the market from what he was saying, as well as some other factors. But before we get into that, if you are not subscribed, make sure to smash that sub button because we're on the road to 1,000 subscribers. Let's just look at what Jerome Powell had to say for the interest rate hikes. Saying the headline is Powell says Fed is poised to hike interest rates to fight inflation despite Ukraine war and market sell-off. So no matter what, they're still going down the same path that they were planning to. He says right here that he'll propose a quarter point rather than a half point, so 0.25% instead of 0.5% hike. Suggesting that that's likely what the Fed's policymaking committee will approve. So they were going for that 0.5%, half a percent rate hike, and probably doing that multiple times throughout the year to try and get to around 2%. But now they're going to a quarter percent, so it's going to take a longer time to get to 2% that they probably are trying to get to. So that's one target. You see saying he noted, however, the Fed is prepared to possibly lift rates more sharply depending on the effects of the Ukraine war and other developments. So had to make sure to slip in the little bit of uncertainty and say we can still do this and still raise it more than what we're saying. So I think the market would have already kind of guessed that, but market's reacting pretty good to this news. Nothing crazy coming out, nothing, rug pull or anything like that. Kind of just expected. The market was pricing in a 0.25% increase, and that's what he's saying they're going to do. So nothing out of the ordinary. Talking about since then, the Ukrainian war has driven oil and gasoline prices higher, further clogged the nation's supply chains, and intensified a stock market sell-off. So it's basically the worst of both worlds. You have a stock market sell-off because of uncertainty, fears, crazy things that are going on. It's kind of reversed by now. We're really done selling off and pretty much found the bottom, at least for now. We'll see if the rally continues or if we plummet back down and whatever happens. But the worst of both worlds with that market sell-off. And then on top of that, you have skyrocketing oil price and gas prices. And that's going to lead to more inflation, higher energy costs, which leads to more inflation. And then you start to get in this same problem where you have high inflation, these oil prices going crazy, and a market sell-off. It's just not a great combo that you really want to have to deal with. And you can see it talks about it here, saying the war is likely to worsen inflation, but could also slow the economy through higher pump prices and falling stocks. That poses a dilemma for Fed policymakers as they weigh how sharply to raise rates this month and the rest of the year. So that's maybe something people don't take into account is oil prices and gas prices have a massive effect on the economy, not only with people traveling and moving around the country, going to work, going to spend money at places. They might stop doing those, traveling to spend money and for leisure and stuff, but also with shipping stuff where you have the truckers shipping things. How does the goods get to the stores? The trucks ship them there, and if gas prices are going up, costs of shipping is going up, so you just have a bigger problem here. But you can see the goal of the Fed rates is the Fed boost rates to discourage borrowing, temper an overheated economy, and head off spikes of inflation, and then it lowers them to spur borrowing, economic activity, and job growth. So we are looking to discourage borrowing because they've pretty much there's a lot of zombie companies in the market. With these rate hikes, we'll start to weed that out, and it's a healthy process of getting rid of the zombie companies that have only stuck around because of cheap debt. You don't want those around. And then an overheated economy, I mean, we've all seen real estate explode and spikes inflation. Goes out saying we're at 40-year highs. So that's their goal there. I don't know if they're really going to be able to do it, though, because of the national debt and things that are much more dependent on what the rates are. I don't think they're going to really be able to push up rates as far as they might need to kind of control this 7.5% inflation. And that's the CPI numbers, where real inflation is much higher than that. But if you look back historically to the federal funds rate, you can see it's basically a staircase going down. And the previous high of where the rates were, the next time that they go up, they never break that previous high. So we'll see what they end up doing and if that trend continues. In the final part of the Powell's speech, plans to tell lawmakers the Fed will begin shrinking its bloated balance sheet after the process of raising interest rates has begun, and will proceed in a predictable manner, primarily through adjustments to reinvestments. So sounds like they're not going to be trying to sell the bonds and mortgage-backed securities that they have, because it would be pretty devastating to the market. You can see right here, since March of 2020, the Fed has purchased $4.5 trillion in treasury bonds and mortgage-backed securities. That is a ridiculous number, a number that the market cannot absorb. They can't sell that and think that the market won't just absolutely collapse. So it sounds like they're doing from this is, instead of buying more, their idea of reducing the balance sheet is to buy less, or stop buying, and then maybe start, selling a little bit, but it's going to take them a long time to sell off $4.5 trillion worth of bonds and mortgage-backed securities. And probably by the time they have to raise rates and start buying these things again, they will be way before they're able to get this number down substantially. But if we look at oil, this thing is skyrocketing like no tomorrow. $111.87, up over 8% just today. I mean, we can see this massive spike we're on. We're already higher than in 2014 spikes. And I mean, we might go and challenge this 2008 of $143 per barrel. Crazy numbers. Obviously, this is going to translate to energy prices, gas prices skyrocketing, the cost of all of these things skyrocketing. That's going to affect the economy. It's going to affect the stock market. It's going to have effects globally. And this inflation could continue to be a problem because of these skyrocketing energy prices. And energy is even a big part of the CPI. So even the CPI numbers that are supposed to be low can be reflecting very high because of this oil move up in price. And just looking at some of these markets, we can see the S&P 500 on the daily, I mean, still pretty substantially down, but recently maybe trying to get over here. We pretty much have, if we draw like a trend line here, basically something like that. So maybe we'll see if it gets above that downtrend, starts to go up, or if it hits its head and continues moving down. A lot of news going on. A lot of pretty green in the market. It was a little mixed earlier in the day, but after Powell's speech, things not looking so bad. It started to kind of turn over a bit. Crypto is also, it was doing better, sold off a bit from Bitcoin, 45K over that, and it's sold off to like 43.7 now. So we will see where all these prices go, and we can look at the VIX, which is the volatility index, up to 30, actually plummeting for today because it started the day around 34. So doing pretty well. If we zoom out a little bit here to something like the weekly, we can see measuring from the top of like this of today, or even the tops of recently, you can see that there's not many days around this level above this line here. Only a couple, except for the period of the 2020 crash and all of the stuff that went on there, was the only time where the VIX was higher than where it is now. So, a lot of uncertainty in the market, a lot of volatility, but it does look like we're seeing a lot of green instead. Maybe a little bit of recovery. Maybe we start to see the market start to flip, and we can get rid of one of the terrible indicators of a market sell-off. And I mean, inflation and oil prices will still be there, but maybe the market won't be a big problem like it has been recently. That's going to do it for this video. Jerome Powell talking about what the Fed's going to do. Market reacting pretty good to it, and oil prices are going to be the deciding factor for a lot of things for the economy in the near-term future, at least, or at least until we see them start to come down, because these prices are all-time highs for the entire 2000s. So hopefully we see a move down and start to get back to normal prices instead of where we are now. But that might take a while. But that's going to do it for this video. As always, I'm going to smash the like button and subscribe. We're on the road to 1,000 subscribers. And see you guys in my next video.